Well, I get the privilege of introducing Michelle Makori, and I use that word privilege specifically. It's really been great in these recent months working with Michelle on some of the aspects of this conference. She's been just wonderfully gracious. So Michelle's excellent vitae. She was born in Israel and raised in South Africa. She's internationally acclaimed for her broadcasting work, her journalistic work. She is a news anchor, a reporter, a producer in her present and past. She worked for Bloomberg, CNN Money, I-24 News. She's presently the lead anchor and editor-in-chief at Kitco News, which just today, I'm not fully sure what the acronym means, but Kitco just received today the Media Organization of the Year from the I forget what the other two initials are. She's covered and analyzed some of the biggest global stories over these past 2 decades: economic, financial, geopolitical, and so much more. She's interviewed heads of state, CEOs of Fortune 500 companies, and many, many luminaries in these various fields of finance, crypto, and more. She has her BA in law and psychology. She was top of her class in more than one situation. She's won the Reporter of the Year. She's really a delight on so many levels, and she's heard me say it a little bit too much to the point where she probably gets uncomfortable in my thanking her for just so much in the recent months, what she's done to help me kind of navigate some things behind the scenes. My new friend, Michelle Makori.
Well, thank you. I'm blushing back there, and it's an honor and a privilege to be here, not only to say that I'm maybe the only Jewess in the room, but as I've said, this is an event for all faiths, including Bitcoin atheists. Not that I imagine that there are many, but you're certainly not a Bitcoin atheist, Mark.
I am not. I'm a good Catholic boy.
And yes, we do have breaking news that Kitco just won the Crypto Media News Channel of the Year award in Malta. The only reason I say this is because I opted to be here in balmy Philadelphia rather than Malta just to participate in this event, and that's how important I think it is and how fabulous the work that Matt is doing is in my mind. So, but this is not about me, this is about you, Mark.
No.
And although you have had your bio mentioned, I will give a quick recap, because you have been at the forefront of institutional investing throughout your multi-decade career. Mark is currently the founder, CEO, and chief investment officer of Morgan Creek Capital Management, which has over $2 billion of assets under management. He's also the managing partner of Morgan Creek Digital, an early-stage investor in blockchain tech, digital currency, and digital assets, ahead of the curve there. And prior to founding Morgan Creek, Mark was CIO and founder of UNC Management Company Endorsement Investment Office for the University of North Carolina at Chapel Hill. And before that, he was senior investment director for the University of Notre Dame. So that is a brief summary.
Sounds way better when you say it. Notre Dame just doesn't sound as good when I say it as you.
Either way, anyway you say tomato, tomato, potato, potato, let's get into the meat of the matter here, not the side dishes. And, you know, Mark, a number of people in this conference have varying degrees of knowledge when it comes to Bitcoin and crypto and blockchain. But I think it's pretty safe to say that everybody here has heard about the FTX collapse and the FTX debacle.
Yes.
And that has been a bit of a dark cloud hanging over the crypto space at the moment. It's the elephant in the room, if you will. FTX, the third largest exchange, filing for Chapter 11 bankruptcy along with its sister company, Alameda Research, which was one of the biggest market makers in the crypto industry.
In theory.
In theory. In theory, that's an excellent point. Taking down a number of big players with it, BlockFi potentially having to file for bankruptcy, one of the latest casualties. Genesis, its lending arm, saying that they need to stop with loan originations. The list goes on and on about the number of players that have had exposure to this massive contagion. And of course, this now clears the way for regulators to march in with tremendous ferocity. So big ramifications, but before we get into that, I think it would serve the audience here for you to just briefly explain what the F happened at FTX?
Yeah, in the short version is bad people do bad things. And it's a story as old as time, right? I mean, you can go back, history is replete with examples of banking shenanigans, brokerage shenanigans. Any place where there's money or things of value, there will be people that abuse trust. And this is a pretty extreme example. You know, as it turns out, there was no there there. They weren't the second largest exchange. Alameda was not even doing what they said they were doing in terms of crypto trading. Half of what they were doing was venture capital, but it really wasn't even venture capital. It was simply what's called a pump and dump. They would purchase tokens of a project that were very illiquid. They would list 1% of them on FTX to pump up the price, and then they would mark to market their 99% share, which is crazy. And they actually refer to these as Sam coins, that he was perpetrating fraud over and over. And what's really disconcerting about this is a lot of smart people, in theory, did diligence on this group, and yet gave them billions, with an S, of dollars of funding. And yeah, again, I don't mean this in any braggadocio. We passed on the deal 3 times, not because we were smart, but because the valuation never made sense. And I actually have never met Sam to this day, never met Sam, never met Caroline. I've watched a lot of video now. Had I actually ever met either one of them, I would have run the other way. And maybe someone say, oh, he's playing 4D chess. He's really not as dumb as he appears. No, he looks pretty dumb. And but Mark, you went to MIT. Yep, he did. But I think I didn't answer your question. What happened? So what happened is, the short version is, there was this company, Alameda Research. It was run by this guy, Suju, and Sam bought it. Now there's some things that happened, and he bought it, set it up as going to be a crypto trading fund. And crypto trading arbitrage is actually really interesting if you actually did it. But arbitrage is pretty simple. In the old days, you had the Pacific Exchange, the Chicago Exchange, the New York Exchange, different time zones, and a stock could sell at different prices on those different exchanges. So you could sell the expensive one and buy the cheap one, different time zones, not sleep, make a lot of money. And now they consolidated all the exchanges, and Ken Griffin came along and made that impossible. So in the real world of finance, you can't really do arbitrage very well. In crypto, you can drive a truck through the difference between a Hong Kong exchange and a European exchange. And so you could sell the expensive one and buy the cheap one and make money. And that, in theory, was what Alameda was doing. Well, now as it turned out, they weren't. That's the first part of the problem. The second part of the problem is they were taking capital into FTX, making loans to Alameda, who then made loans, personal loans, to SBF and other members of the team. That's over $4 billion of money that was just stolen. So if you're supposed to have customer assets backing customer deposits and you take them, that's bad. It's like, savings and loan problem, global financial crisis, financial shenanigans.
Which, had this really been a DeFi company, really using blockchain,
yes,
this would not have happened. And it's interesting that this is being pointed at as the, oh, look, DeFi doesn't work, crypto's going down, blockchain's a scam, because arguably, had it been a decentralized finance company with smart contracts, with assets accounted for on the blockchain, you couldn't get this stuff passed through. This was
Michelle, it's such an important point. I mean, incredibly important insight. This is not a crypto failure. It's not a blockchain failure. It's not a Bitcoin failure. It's a banking or exchange or brokerage firm failure. And again, it's as old as time. Any time where you collect assets and you are responsible for those assets, in order to make money on those assets, you lend them out. And fractional reserve banking, right? The way it works, all of us put our money in a bank and we lend it to each other. And we've all seen the movie It's a Wonderful Life, right? If you have a run on the bank and everybody wants their money, the money's not there. But that's okay, because it's in this house and that house and this project, but that means you actually made the loans and actually put the money to work. If you weren't doing any of that, then it goes under. But to your point, in DeFi, if I make a loan to somebody, like I'm notorious. I'll make people bets on football games, like the big one this weekend. My good friend Dan Moorhead, his son's the quarterback for BC, so we'll probably have to put a little bet. But I'm notorious for forgetting who I owe a steak dinner to. But if there was a smart contract, those people would get paid, and it wouldn't be, the Welch or Yusko. But, steak dinner is not going to take down the financial system. But in this case, had we been decentralized, had it not been trust me, give me your capital, and I will put it in the bank and loan it out to others and pay you interest, we wouldn't have this problem, you're right.
And the reason that Satoshi invented Bitcoin was because of the failures of the traditional financial system to get away from all of that. Unfortunately, what we're seeing is that many in crypto are employing some of the traditional financial system methods minus the regulations and the oversight, and moving away from the initial vision. But
again, it's a brilliant insight, and this is important. Even in that case, right, where we don't have the regulation, for example, we don't have FDIC insurance. So if you put your money in a bank, by the way, any of you have money in a bank, it's no longer your money. You do know that, right? It's the bank's money. It actually shows up on their balance sheet. You have an IOU that is good 99% of the time. If you were in Cyprus in 2012, you got 25 cents on the dollar. If you're at La Jolla National Savings, you got 0. And the FDIC had to pay you. Well, unless you had more than $250,000, then you didn't get paid. So insurance protects us against the fraud of a communal banking system. And the way fractional reserve banking works, you take $1, you lend out, 89 cents, you keep 11 cents, and then they deposit that 89 cents, and you lend out another 78 cents and keep 11. And you do that, and you could do it about 10 to 11 times leverage. If you exceed that level of leverage, like Lehman and others did in the global financial crisis, it blows up. But normal fractional reserve banking, which a lot of people online are railing against, and that's a fraudulent system. Name a country that has a bad or absent fractional reserve banking system that you would live in. I'll wait. It doesn't exist. So fractional reserve banking is what defines progress. It is one of the great inventions. The abuse of it is bad, either too much leverage or stealing the money. But ultimately, this is not an indictment of crypto, of banking, because we're moving from Tradfi, traditional finance, right, where I said we have these trusted third parties that have had a good 800-year run. We're moving to DeFi, pure decentralized finance, where we'll take the human element out, because a smart contract, well, I was going to say can't steal. Well, it actually can if it's coded inappropriately, if there's a back door. But let's assume that because it's on blockchain, it's auditable and it's fair, and I think in an open source world that's probably true. In the middle is CeFi, centralized finance, which is this bridge from Tradfi to DeFi. My dad, 84 years old, thinks he owns Bitcoin. Now people say, oh, he doesn't. He's at Coinbase. My dad believes he owns Bitcoin. He's never going to hold his keys. I'm not going to hold his keys, because if I lost them, then I'm a dead man. So not happening. So I'm happy to have him there. Now, people say, but there's risk. Yep, there's risk at Bank of America. There's risk at Coinbase. As we saw, there's risk at FTX. But I'm comfortable with the risks of centralized finance that is a bridge to DeFi.
All right, but this has now sown the seeds of doubt. Institutional investors are pulling out. And again, as I say, this has laid the ground open for regulators to come marching in. What are the ramifications of this debacle?
Punishment. So if you remember when Luna collapsed in May, which I thought, how does this always happen? So Luna collapsed, and literally the next morning, Yellen was on talking about how there needs to be regulation of stablecoins. Like, no way did she have this prepared speech. So either she knew in advance that this was all going to go down, or maybe somebody in that group caused, because there's a whole theory on how the Luna debacle happened. Someone had to be short $2 billion of Bitcoin. Not that many people can do that. So make a long story short, again, the day after the FTX thing broke, she's out there saying, this proves we need more regulation. So I describe it as this. 2009 to 15 was there's the Gandhi quote that Gandhi didn't say that I wish I could remember who said it. First they ignore you, then they laugh at you, then they fight you, then you win. 2009 to 15 was the first they ignore you. Bunch of nerds and geeks playing with your magic internet money, who cares? Then 16 to 21, then they laugh at you. Bunch of nerds and geeks, magic internet money, yeah, ha ha ha. 22 to 27, then they fight you. Mm-hmm. The fight started earlier this year. It's going to go on for years. And it's the way it always happens. Anyone ever heard the term red flag? You know, red flag?
Yeah,
you've heard that term. You know where it comes from? When the horse's carriage was invented, the horse and buggy manufacturers went to the legislators in New York City and bribed them to pass a law called the red flag law. So if you had a horse's carriage, you had to hire a person to walk in front of your car with a red flag to warn everybody you were coming. Anyone ever seen that in real life? No, but that was a real law. So incumbents use regulation that they purchase through lobbying, which is just a fancy word for corruption. I mean, it is. And you know, we always say, all these other countries are corrupt. Really? I mean, ExxonMobil, 2014, made $40 billion. Tax rate at the time was 40%. How much did they pay in tax? $16 billion. How much did they pay in tax that year? Minus $1.7 billion. How did they do that? They paid $329 million in lobbying, the number one lobbying firm in the country that year. So they turned $327 million into $17.7 billion. That's a good investment.
I'd say.
It's corrupt, but it's a good investment. So the regulation that's coming, and the reason I use punishment, the normal set of regulation was to slow the disruption of banking. Because when BlockFi started and people moved a few hundred million out of banks into BlockFi, because in the bank you made zero. No, BlockFi. BlockFi, okay. The company. So okay. BlockFi was a lender, and what you did is you took your money out of fiat, where you were making zero, literally zero. You turned that fiat into a stable coin or Bitcoin, deposited it at BlockFi, and they would pay you 6 to 8. Well, how did they pay you 6 to 8 if the bank will only pay 0? Well, there's a surplus of fiat in the world. There's too much fiat. So there's no demand to borrow. Right? If you look at lending, it's going down. Borrowing is going down. So they weren't making enough interest to pay high rates because rates had been pushed to 0. Well, in the digital world, there were lots of people, Susquehanna and Citadel and others, who would borrow those digital assets and pay 12, 13%. Well, if you can make 12 to 13% on your loan and pay 6%, you make a lot of money. Very profitable business. The only way it breaks down is if somebody doesn't pay you back. So Three Arrows Capital was the first one. They lied, right? They told all the lenders, oh, we have a lot of money. They had $2 billion of equity on $6 billion of loans. So they just lied. They were just bad people. Interestingly, BlockFi, that didn't hurt them. They actually had collateral against their $1 billion loan that they were able to seize and sell immediately. So this is a company that for 4 years went through 2 bear markets, went through a 50% down day in March of 2020 with 0 loan losses because they were really good at collateral management. Turns out, unfortunately, Alameda borrowed money, gave it to Sam's shell companies to give away or steal or whatever he did with it, and it's come to light $600 million of assets on $10 billion of liabilities. So they lied to everybody. So if I'm a lender and I trusted you, but you lied to me, tough business. And that's where we are today. So the punishment is coming that I believe the government's going to use this as an example of a failure of crypto and try to put serious punishment against all the actors, probably set us back a couple of years in terms of adoption, but it doesn't change the fact that this technology is inevitable, this technology is superior to fiat, that this technology is superior to the current banking tech that we have, ACH and Fedwire. It's a long answer to your question.
Okay, so it's going to get very ugly, and regulators are going to come in and try to strangle the industry. Look, there are a lot of conspiracy theories, which we're not going to wade into, that this is perhaps...
No, but I did a whole if you want to go down the rabbit hole in conspiracy, On the Margin podcast last Friday, 2 hours.
Right, that this was perhaps by design, that this could perhaps have been a way to get...
Some of us might believe that, yeah.
We won't go down that road, but the end result is the same.
Yeah.
Whether it was by design or whether it was by malice or stupidity,
Right.
the end result is the same.
It's the same.
So regulators are going to come in, they're going to try to strangle the industry. We've got the naysayers saying, see, we told you, you were right, this is all just a bubble. We've got the Economist, their lead article today is this the end of crypto? So that's the sentiment out there.
Yep.
And yet you are still very, very, very bullish.
Oh, look, I'm wearing my Bitcoin moon socks. I got the rocket and the moon. I have a pair of socks that, rest in peace Bitcoin. It's got a bunch of, tombstones and the little, wings. Look, Bitcoin's been declared dead 533 times in 14 years, 533 and counting. There's actually a Rest in Peace Bitcoin website that tracks every article like this. And the more people say that it's dead, the more people say that it's going to go away, the longer it's going to live. Because you can judge the quality of an idea by the quality of its detractors. Right? When Jamie Dimon says it's a fraud, that's good.
Well,
he's actually a pretty good guy.
Come around.
No, but he's actually a good, he's kind of come around. I mean, he has a team of like 500 people working on it behind the scenes. They got their own token, the
He's
JP
like,
Morgan
if you can't
coin.
beat him, join him, kind of mentality.
Exactly. And look, what he wants, and what they just started a trial, 12 banks set up this trial of a CBDC, central bank digital currency.
Yes, the New York. That's a whole other conversation.
Oh, no, that's pure evil. And if you haven't seen Augustin, whatever his last name is, from the BIS, it's 1:47 of the most evil, dystopian, frightening thing. And basically what he says is, well, of course, we should control your money. We should make the decision of how you spend it, when you spend it, if you can spend it. Imagine this. Central bank digital currency. You get paid, tomorrow's Friday, payday. You get paid, have a couple cocktails, drunk text about the president, you wake up on Saturday, your money's worth 70 cents on the dollar. Whoa, okay. Or imagine that Walmart pays the government extra, and so your money doesn't work at Target. It only spends at Walmart. Absolutely, with programmable central bank digital currency, that could happen. So that is a dystopian nightmare that we want to avoid, and all it is centralized fiat.
Yeah.
So it has all the negatives of fiat, meaning it can be created out of thin air, plus it's programmable, which means Augustin, and he looks like, I used to call him Jabba the Hutt, but he actually looks like Kingpin from Back to the Spider-Verse.
I want to try and circle back to central bank digital currencies a little bit later. 19 out of the 20 G20 members are now in very active stages of exploration there.
Yep.
But before we go that, Bitcoin, as we said, supposed to be a hedge against this debasement and devaluation that we've discussed. We've had unprecedented fiscal and monetary stimulus. In your presentation, I think you said 40% of the M2 monetary supply?
50% of all the dollars in the history of the Republic in the last 2.5 years.
There you go. Okay, tremendous inflation. We've seen our purchasing power decline. Inflation at 7.7% is what the official number is that they're giving us. Bitcoin is supposed to be a hedge against inflation and a store of value. And Bitcoin is now down about 75% off its high, which was about this time last year.
But there's the issue. The high doesn't matter. The low doesn't matter. What matters is since that money printing started in 2020, right? We doubled the supply of money. Therefore, the price of Bitcoin should be up 100%. It is, precisely, almost exactly. Now, people say, oh, but the last 6 months. Price is not value. Right? I showed you the Metcalfe's Law model. We can calculate a very precise estimate of any network, the value. But the value has nothing to do with price. Price is a liar. Price is what two people will pay for a small amount of something. So think about Microsoft stock, right? If you have 100 shares of Microsoft stock, you can pull up the price right on NASDAQ, and that's what you'll get. If you have 10,000 shares, you don't get that price. You get a lower price. If you have 1 million shares, you don't get that price. So what happens in markets, it's happening in the stock market right now. The stock market, the S&P, despite being down 25%, is still 100% overvalued relative to the discounted stream of future cash flows. Okay? It's only been more expensive 10% in all of history. Yet if you look at Bitcoin relative to its history, it's only been cheaper relative to the Metcalfe's Law value 3% of the time. So if I'm an investor, would I like to buy something that's in the 3rd percentile cheap or in the 90th percentile expensive? I like cheap. I'm a value guy. I drive a Kia.
So you're very adamant that blockchain is here to stay, DeFi is here to stay, crypto is here to stay. And one of the points that you made in your presentation earlier is that getting into crypto now is like investing in the internet in 1997.
Yep.
But a lot of companies back in 1997 aren't around anymore.
Great. Oh, God, great insight. Yeah.
So the question is Bitcoin the Netscape or the Google? Does Bitcoin's survival of this, you can believe in the technology, but is Bitcoin still going to be there?
So good. So a couple things have changed. So everybody says, well, why isn't Bitcoin the MySpace? MySpace owned social media. Everybody was there. And then Zuck stole the idea from the Winklevoss twins at Harvard and created Facebook, the Facebook at the time. And that became the dominant social media platform. Why? Because at the time, all software was closed, right? MySpace had proprietary software, Facebook created proprietary software, and no one knew which one was superior until you tried it out, and it turns out Facebook was better. So MySpace goes away. Something changed. In 1998, these guys from California came out to North Carolina and said, hey, we want to take you to this company we're backing. I'm like, oh, what's it called? I'm like, Red Hat. I'm like, oh, what do? They give away software for free. I'm like, that sounds like a bad business model. That makes no sense to me. Well, it's a great business model because what it does is it gets the software, Linux in that case, software into other computers so you have an alternative to Microsoft and other things. And long story short, that was sold to IBM, I think recently, for $40 billion. So it was a pretty good idea. But what it did is it revolutionized code. Code now is open source. So Bitcoin is the best solution for a blockchain representation of money, asset that exists in the absence of a liability. But it's even better than that. If anyone came up with anything that was even remotely better, copy-paste. It's happened twice already, segregated witness, SegWit, and Taproot. You can take that new code, copy-paste, and make your code better. And here's the other piece. Paul Romer won the Nobel Prize 4 years ago for the law of increasing returns. He wrote a paper 30 plus years ago, date myself, that I read in business school. And for 30 plus years, I said, this guy's going to win the Nobel Prize. It took the dang group 30 plus years to actually give it to him. But what he said is it's not the best technology that wins. It's the technology that gets critical mass first, the network effect. So Betamax and VHS. Betamax was far superior. VHS signed the deal with Sony, right? CPM, far superior computer operating system. The story is IBM flew to Seattle, met with the Microsoft guys. Bill Gates looked like the coffee boy. They literally thought he was the coffee boy. They left, flew to California, met the husband and wife. The husband, like, nope, you have to sign an NDA. They're like, dude, we're IBM. We don't do NDAs. Show us your stuff. Like, nope. So they went back to Seattle, signed the deal, and now we have computers that crash every, you have to restart it. But CPM was way better. It was superior technology, but critical mass was because IBM signed the deal. So Bitcoin has hundreds of millions of users. It's growing every day. That can't be supplanted. And the question, there is still a question, right? The internet used to be 80 protocols. Today there are 5, right? There's TCP, the IP, Internet Protocol is the base layer, then TCP IP sits on top of that, right? We're using it, to broadcast live, voice over Internet Protocol. Then you have FTP that moves files. You have SMTP for email, HTTP for websites, www that connects the websites. Used to be 80, now there are 5. The question is, are we going to have a single stack going forward? Bitcoin is the base layer, Filecoin sits on top of that, maybe Cosmos, maybe Polkadot, maybe Avalanche, maybe Solana, and then Ethereum's the www dot. Or is it all Bitcoin? Bitcoin's the base layer, Lightning's the second layer, L3, L4. Or do we have a bunch of L1s and we bridge across? I'm not technologically sound enough to know, but I don't really care. I'm going to own a little bit of all of them. And to your point, in investing in the internet, in the mobile net, in the truth net, you don't have to win on every one. You don't put all your eggs in one basket. You make a bunch of bets, and you find out through the power law which one wins. Because the ones that go to 0, you only lose $1. Okay. The ones that go up could go up 10, 20, 100 times.
But seeing as you brought up the beta VHS example, neither are in play at the moment in terms of adoption.
Right.
We've moved on to, first it was DVDs, and now it's streaming. So again,
analog to
digital.
Internet to digital.
So on a scale of 1 to 10, how confident are you that Bitcoin survives all of this and is
10.
somewhere?
11,
You're a 10.
11,
All right.
12.
This is a Bitcoin maxi here.
No, I'm not. I'm actually not a maxi. In fact, it's funny. I go to spaces, hang out with the cool kids, and if I go on a Bitcoin space, they're like, get out of here, you shitcoiner. I'm sorry, but get out of here. That's actually a term of art, right? Congress. If I go on an Ethereum space, they're like, get out of here, you Bitcoin maxi. I'm like, and if I'm on the Bitcoin space, I'm like, look, I own more Bitcoin than you, so stop. If I go on an Ethereum side, I'm like, I own more Ethereum or Solana than you, so stop. And what happened in social media, we have tribalism. We got to stop the tribalism. What we need is dialogue and debate in search of truth. Good Jesuit foundation. We need dialogue and debate in search of truth. Because if you're debating somebody to convince them of your opinion, you're wasting time. Listen to people that you engage with to learn and discover truth. And that's ultimately how we're going to make progress. So the tribalism needs to go away, but I am absolutely confident that Bitcoin, as the base layer of money, has won.
All right.
I'm not as confident that Ethereum will win as the www dot, and I'm not as confident that Filecoin necessarily replaces FTP. I'm not as confident on Solana Avalanche, but I am as confident as Bitcoin that blockchain is the next epic, right? That the internet, the mobile net, the truth net, there's no doubt in my mind that every computer system in the world will run on blockchains, and that as easily as we exchange information two-way on the internet, we will exchange value, every stock, every bond, every currency, every commodity, every asset, on blockchains using this technology.
Okay, so seeing as you're a Bitcoin believer, let's talk a little bit about the Bitcoin standard, because whilst everybody's been paying attention to the FTX debacle, a little news item may have slipped under the radar, and that is that another nation, albeit a small Caribbean nation of St. Kitts and Nevis, has said that by March of next year, they expect to use Bitcoin Cash, which is a fork of Bitcoin, as legal tender. That statement made by the country's prime minister, who's also the finance minister. We've got El Salvador, which the previous panel touched on, and the Central African Republic, using Bitcoin as legal tender. What do you make of that trend, and how do you see it developing?
No, it was the Hal Finney quote, right? Bitcoin is a superior form of gold. Everybody says, but it didn't start out that way. It was a peer-to-peer cash system, and it was supposed to. Yes, Satoshi Nakamoto, whoever he, she, they are, although I guess he self-identified as a he once, but I think it's actually more than one person. And I think Hal Finney actually was one of the four. And And these were brilliant scientists that had a vision for digital cash. Because the problem with electronic cash is it could be duplicated. And what hashing does, and what proof of work does, and why proof of work is so critical, and proof of stake is just the bad old days of whoever has the gold makes the rules, by converting energy to value, I heard the panel talking about that, everything we do in our life is about turning energy to value. Everything we do. We got up this morning, we fueled our body, we're trying to create value through discussions, by making widgets, by doing whatever you do. Everything in life, converting energy to value. Bitcoin is the perfect conversion of energy to value because it is portable, it's divisible, and it is permanent. It is immutable. And so if you think about that system, in technology, you can be fast or secure, not both. Visa is fast, not very secure. Gerard was telling me he got hacked while I was giving my talk earlier, which is crazy. Never seen that before. And had to get a new Visa number. And Bitcoin chose to be secure. And so that level of security argues for what Hal said, that it could replace gold. Think about it. All money in the world is backed on gold. The central banks around the world own gold. Now they own other stuff too, but most of it is gold. So gold is the base layer of money. And then we lever up at the nation state level. But here's the cool thing about Bitcoin. It erases nation state. We can be anywhere in the world, literally, and exchange value with no nation state, with no corporations, with no middle people. And it takes a while to really let that sink in. And take, where you're part of the world where you're originally from. In parts of Africa, there are people who don't have any of the things that we take for granted. Mm-hmm. Yet, with a mobile phone, they can do lending, borrowing, commerce. And ultimately, my one pet peeve is all the nonsense about, take all your coins and put them on cold storage. Okay, guys, here's the thing. If all Bitcoin is an electronic thing that you put on a ledger and bury in your backyard, we're done. We already have that. It's called gold. We don't need electronic gold, digital gold. What we need is the base layer of money. We need that Bitcoin to be the base layer of money, which then allows it to be lent, borrowed, spent, and engaged. And people say, we don't want to rehypothecate. We really don't want to fractionalize. No, you're missing it. Growth comes from that lending, borrowing, creating, and innovation. Everything that we love, right? Stock market gains, bond market, all comes from innovation, from entrepreneurs building things, and they build it based on that monetary layer being able to grow over time. All I want to do is get rid of the fiat, which devalues my asset every day I'm alive, and replace it with something that stays.
You want to get rid of the fiat. The central bankers, not so much.
No, not so much.
And you mentioned gold, and it was a day that, as you also mentioned in your presentation, where fiat, well, it wasn't fiat, when the dollar was backed by gold.
Look, it's not a coincidence that Satoshi Nakamoto's birthday is 4/5/75.
When Nixon took us off the...
4/5 was the day that Executive Order 6102 was issued in 1933, made gold illegal, and 1975 was when they reversed it and made it legal again. And then it's actually kind of cool. There's a young woman who, Lisa was here, yeah. Your daughter, right? Yeah, your daughter. I want to make sure I get the story right, but her daughter came up with this idea that I love, genius, I want to hire her, said, well, wait, 6102, 21 and 6 zeros, there's your 21 million.
Oh, all right, yeah.
Because where did 21 million come from? I think that's it.
But my point is that we had Nixon take the dollar off the gold standard in order to allow central banks to print money. Then it became mouse click money. We didn't even need to print money. And that's given central bankers, obviously, a lot of power that they're not going to want to give up.
Nope.
Now, we have seen faith lost in fiat currency. We've seen faith lost in the dollar internationally, with it being weaponized recently. If you're Saudi Arabia, you're like, I don't want to own dollars. Look at what they did to Russia. Yeah. We'll get into the rights or wrong there. That's a whole other conversation. But big picture, what would need to happen for there to be a Bitcoin standard? I mean, things would need to go terribly wrong for central bankers for them to have to
No, they would just
acquiesce to this.
They would have to realize it's like the old Vantage commercial. I shouldn't talk about cigarette commercials, but the old Vantage commercial, I'd rather fight than switch. So they got to stop fighting and just accept the inevitable, which is, look, gold has had a good run for 5,000 years, but we can replace that base layer of money with Bitcoin. And if central banks embraced it, they could use it as a lighter weight base layer to then have their digital currencies, which again, I'm not a big fan of, but those are not cryptocurrencies because they're centralized, not decentralized. Look, my friend says it best. He says, I remember a day when I didn't know the names of the central bankers. I long for that day to return. The central bankers should not be powerful. They should not be getting Nobel Prizes and on covers of magazines. It's ridiculous, right? They're destroying our wealth through inflation and siphoning the money at the top of the pyramid. That is taking capitalism and replacing it with cronyism. They should not be celebrated. They should actually probably be jailed. But the reality is, until such time as they stop fighting the technological innovation, which they eventually will, right? We don't ride around in horse and buggies. Well, I guess in parts of Pennsylvania you do, but not anywhere else. But, you know, we fly on airplanes. I mean, I flew on one this morning. My grandfather-in-law left the train industry to go to work for American Airlines. His parents were horrified. And the train companies actually passed out pamphlets saying that if you got on an airplane, you would die. That your body would cave in on itself if you went too fast. Okay. Clearly that does not happen. But they spread FUD, fear, uncertainty, and doubt, to try to slow the adoption. But good technology always wins. Okay, and I get that the technology will flourish, and we're already seeing it, as you mentioned, central bank digital currencies, which will be a form of that, though not in the decentralized manner. But again, what would it take to get the central bankers, who some central banks own gold? Canada, for example, has no gold. Yep. What would it take for central bankers and the US in particular to say, now we need a Bitcoin standard? How would that happen? I think your point is really well made, that it's going to be hard. The cool part, though, you know, the last part of the quote, the Gandhi quote, is, and then you win. The good part is, if you're already here, we already won. If you own Bitcoin, if you embrace blockchain technology, we've already won. And the coolest part of all of this is we don't need them to adopt a Bitcoin standard. We can become self-sovereign. We can exchange value without trusted third parties. We can own this asset free and clear, titled in us, permanent, immutable, on-chain. We don't need them. Now, as they figure that out, one or two things will happen. Either they'll vilify it, demonize it, penalize it, punish it, and lock us all up, which means we have to move to another nation state, which I haven't figured out which one yet. Or they'll say, yeah, this makes sense, got it. And I believe this is an evolution, not a revolution, and that it won't result in bloodshed and all that good stuff. But I am actually very hopeful. You know, I used to get this reputation, Mark, you're so bearish, you know, you hate everything. I'm like, no, I'm actually wildly bullish. I'm just wildly bullish on a different view of the future, and it goes to my pinned tweet. I believe in something that a lot of people don't understand. And as more and more people understand it, they will believe it, and we'll get there. All right. We are unfortunately out of time. So much more that I would like to talk to you about, including, and maybe just get a line in on this, because I think it's important to highlight this, because I do think, I had a guest on the show that said central bank digital currencies are the spawn of Satan. They are, definitely. So I think... Definitely. They might even be Satan themselves. So I think it's just important to get a quick line on your thoughts there and what we can expect and how that may or may not work in conjunction with Bitcoin. It's a long conversation. It's happening already, right? There's a digital renminbi. They have their social credit score. You can't move around the country unless you have a green pass. Look, the pandemic was the test, right? It was created to test how much we would accept in limiting our freedoms and our rights. And central bank digital currency is a form of limiting our rights and freedoms. And it's bad stuff. I hope it doesn't happen. I fear that the powers that be will push us in that direction. As I said, the good news is we can opt out today because there is technology, blockchain, Bitcoin, et cetera, that allows us to opt out. And the last piece of it, NFTs. So NFTs, most people think monkey JPEG, cartoon and image. No. NFT is maybe the most important concept in blockchain because it's a non-fungible token. What is a non-fungible token? Non-fungible means unique, okay? Unique digital asset. Token is simply a line item on a blockchain. That's all it is. And what that says is that whoever owns that line item owns title to that asset. Today, that asset happens to be monkey JPEGs or whatever, but it could be anything of value. Okay? Any stock, any bond, any currency, any commodity, piece of real estate, any piece of art, my driver's license, my marriage license, anything, and ultimately all of them will be tokens. And all of it will migrate on chain, and I hope will change the term NFT, which people think of as art and collectibles, to digital property rights. Mm-hmm. Digital property rights will redefine everything. It will strip out the cost of all of the databases that we use today to monitor that value and storage of that value and free up that capital for creativity, innovation, and new wealth creation.
Okay,
Right.
I lied. I have one more
All
question.
right. Well, Matt will give you all day.
I know.
because he
Well,
likes you.
I don't know about that, but I do think that this is just one important thing to just squeeze in here. Given that you manage over $2 billion of assets, if people are new to investing in the space, and you said get off zero, you must have some exposure, what is the simplest way to get exposure to crypto, blockchain, Bitcoin? What would you say is the simplest way to do that?
Yeah, it's a harder question in the last 2 weeks. So I used to say, buy GBTC because it was the easiest, right? It was a, exchange traded. The problem is because of banks shorting it, the spread has blown out to 40+%. And until they close down the trust and give the Bitcoin to people, I think that, so I don't say that anymore. So, and now that Barry has his problems with Genesis, I probably really wouldn't say it. There are some exchange-traded notes outside the U.S. by a firm called Amun or 21 shares. So there's ABTC and then there's a Canadian one. Those are the easiest, right? You can put them in a brokerage account, don't have to get permission. The next easiest way is to open an account at Coinbase, or Gemini. And again, not an earn product where it's being lent, but just a custody product where they're holding, one-to-one reserved.
And buy Bitcoin?
But buying Bitcoin, so you're buying Bitcoin, but you're buying a paper form of Bitcoin. But it's easy. You asked easy. The harder is to actually buy Bitcoin directly. And it's, as Lisa was saying, you can do it easily with a wallet and she can send you some. It's a little bit harder. I mean, a lot of people aren't even savvy with apps, but that is the most direct, the most self-sovereign, and ultimately I think everyone needs to be there, but you have to be at least facile with wallets. And then we talk about, on a hot wallet, it can be stolen. Right? You can get SIM swapped and they can steal it. So now you need to go into cold storage with a company like Ledger, which we own a piece of. They had their greatest sales week ever last week, right? Greatest sales week ever. And my brother's calling me, send me a Ledger, and my dad's calling me. And the problem is, it's an amazing product. If you're a 7 or 8 technologically, but if you're a 2 or 3, don't try. Because you will lose. And the thing about a bearer asset, once you lose it, it's gone. If you make a mistake, you send it to the wrong address, it's gone. So if you want to do it, if you want to go, find someone to help you. Lisa said she would help anybody. That's great. There are other people that will do it. But
bottom line, buy Bitcoin.
Buy Bitcoin. I mean, Bitcoin is the king. I used to say, again, before it was politically incorrect, that crypto is like Saudi politics. There's the king, the crown prince, and all the other princes that hate each other. So there are 6,000 princes. They all want to sell you their oil. So they hate each other. And the king is the only one that matters, and the crown prince is just waiting to be the king. So there's Bitcoin, Ethereum, and all the other princes that hate each other. There are 10,000 tokens. 9,800 of them, 9,900 of them are all going to zero. Now, the ones that don't go to zero could go up a lot, but there's only a couple at the tippy top. Bitcoin is the king. Maybe Ethereum's crown prince. Maybe there's a couple other ones.
All right.
That's what I think about it.
All right. Well, we will leave it on that note.
Thank you.
Bitcoin is the king. And
Yeah.
thank you for lending your royal analysis to us today.
You're kind.
Thank you so much, Mark
All right.
Yusko.
Okay.